Hi everybody, it's Jason again from Forex Varsity, and today I'm going to be going through what actually should have done a long time ago, and that is accurately predicting the what we call here as kill zones. So you'll see them in the newsletter. It's either obviously the red for a sell, green for a buy, and now I'm going to show you the steps that I go through. This is going to be obviously off of the 4 hourly because that's at Forex Varsity, that's what that's what I generally, I know you guys obviously, I've said this a lot, but I love the 4 hourly, and I'm going to show you how to use the 4 hourly. This can be applied to obviously any other time frame, depends on which one you guys personally like more compared to others, but 4 hourly I've found is actually most consistent. So what I do is I go through a plan. So you guys can write this down when you listen to this, but it is, I start off with trend, level, signal. Okay, so just keep that in mind, that it's always in that order. So it's trend, level, signal, and what trend is, obviously you guys know that. Okay, so I won't go into detail now because I'll show you once. I'll explain to you practically on the screen, on my chart. Sorry, but it's going to. I switch to a higher time frame, and you should always implement higher time frames because the 4 hourly, yes, it is consistent, but the daily, weekly, and monthly are much more consistent because every day a candlestick obviously closes on the daily, but on the 4 hourly there's so many candlesticks during the day. Okay, so obviously with the daily candlesticks, it's the most consistent. It shows you what the price has done during the day. So obviously so you can see on this candlestick here, for the day it was obviously bullish. So let me open here and I'll just show you, just giving you an example. So would have opened here from where the line was, so that's where the daily would have opened. Where was it? That's 8 there, that's 12 o'clock. So for the day was bullish, you can see there obviously. So there are 6 4 hourly candlesticks in one day, and there's one daily candlestick in a day obviously. So therefore you know that the one candlestick on the daily is representing four candlesticks, 6 candlesticks on the 4 hourly. So that's why I go up one higher with regards to the time frame, because it's the levels and the signal on the daily is much stronger, obviously, because of due to the fact that it's every single day, so it's much slower and much more consistent. So it basically it reels out all of the noise during the daily, but if you with regards to the 4 hourly, so the daily rules out all that noise and all that volatility, and it shows you for the day. So obviously the daily can be trusted much more because it's much stronger. There's much more consistent movement, as you can see on the daily. You can see how nice and smooth these zigzags are and how they go up. But on the 4 hourly, you can just see it ranges quite a lot on the 4 hourly, as opposed to the daily being in more of a trendy state. Okay, so I'm gonna start with obviously trend. So guys, it is very important that you make sure that trend is congruent. And what that means is that the daily, if you're entering on the 4 hourly and the 4 hourly is downtrending, the daily can't be uptrending. And there's an obvious reason for that, and that reason is the daily holds more weight and holds more momentum. So say for example you were entering a 4-hourly trade as a buy, but then the daily is going down. As I explained, the daily is much stronger as opposed to the 4-hourly, and it has much more consistent and valid moves and movements. So if you were opposing the trend and trading counter trend, so you're buying on a 4-hourly but the daily's down, that wouldn't make sense, because you're going against momentum. So if you got in on a daily trend, if you spotted a daily trend early enough, you could ride that on the 4-hourly all the way down. Because yes, the 4-hourly will make higher highs even though the daily is making lower lows. And I'm not saying you must trade counter trend now, it's just to put it into perspective for you guys. It's momentum is strong on the daily, so you can ride that all the way down if you have the psychological mindset with regards to trading, and you won't get out or move your stop loss, and you'll keep in that trade. So say for example, I know I'm going a bit off topic, but it'll help explain everything when I'm going to do it. So say you entered right here. That could have been, sorry, let me start on the daily. So say for example, you could see the daily was obviously going bullish. It was going bullish at this point here because it made a new higher high, but it made a higher low here as well. So you could say that constitutes as a uptrend now. So say for example you got in on this huge bullish engulf, but now you entered on the 4-hourly, because I don't think anybody wants to wait a day for a candlestick and wait a day for their money. So you could have entered there, and as you can see on the daily, you could say it's 30% or 40% of its way up on the daily. But look how beautifully it would have worked out. On the 4-hourly, you would have just entered. You would have just entered here, even though it was 40% of the way on the daily. You could have just entered here quickly, ridden that all the way up, and that just shows how strong price carries on the daily. If you had the mindset to stay in, that's 632 pips. Okay, and that's over a space of what, 20. That's just over a month. If you stayed in that, you would have made big money. Okay, and that's one time frame. So try always, well, not try, always look at the daily. Okay, look at the daily first. Well, obviously you have to analyze your 4-hourly. So you look at, okay, I don't want to confuse you, so let me actually just start. So you guys obviously understand about the momentum of the trend going down, and you have to trade congruent trend. Okay, so let's say for example we were looking at entering a trade, and we entered a trade. We were looking at the 4-hourly, and we would have been the straight. Okay, so let me make it as if you wouldn't have been able to see that. Okay, so you guys would have seen that. You wouldn't have been able to see up until here, just pretend, but you would have seen that. Okay, now you would have seen that it's made its C point, its C turn. Okay, so now price has come down. Now you're waiting for price to for a retracement, therefore as you will be able to get in. Okay, so just a reminder, always buy at the lowest point on the chart, at the lowest price, so therefore you'll get in where all the professionals would get in, or sell at the highest point, because then there's no room for price to go up even more and for you to lose more. So say for example you entered a trade this point, just see the mouse, this point over here, you would have lost out on quite a few pips and dollars if you entered here opposing to here. So always try, obviously I'm probably stating the obvious, but always try get in at the highest or lowest point depending on whether it's buy or sell. Okay, so basically as ranging, you get in at the highest point of the range or the lowest point of the range. Okay, so you guys would have seen that it's making a retracement up, so you would have said to yourselves, okay, now I need to analyze for a sell. So now we start off, it was trend level signal. Okay, so we start off with trend. You would have seen it didn't make a higher high there. That zigzag was just due to wicks. So it made double tops there, so it still constitutes as a range from here. But now at this point here, past, you can see, yeah, this was a low. Now as soon as it broke that low over here, you could say that trend constitutes as a downtrend because it's made a nice lower low and it's pushing bearish now. Okay, so you would have had to look at your daily because you want to get in with momentum and you make sure you're not trading counter trend. So there, you would have seen that it made at this point here, would have made a lower high. That's one tick in favor of downtrends, and at this point it broke its low. So what can you say now? This is obviously in a downtrend. Okay, so now that you're all set with that, now you know whether that you're trading congruent trend. So that's one tick in your favor. So now the next thing is level. So I would always draw my fib first. Okay, and I'll show you the reason for this. So now you draw your fib from your high to your low, A to B, and now you're waiting, now you're waiting for price to come up and meet your levels. So here is your here is your 50 and 60, 61. Okay, so let me just mark that off for you guys so you can see, because obviously you know, stating the obvious again, obviously you know that the 50 and 61.8 is a huge level of rejection, and price is drawn to these levels as if price were a magnet. Okay, so the 61 and 61.8% and 50% areas on the Fibonacci would be, could see it as a magnet, and price is a piece of metal. So it's it's pulling it towards it. Okay, so now this can't be enough to enter a trade. That would honestly be gambling if you just drew a fib. I mean, why wouldn't be? Trading isn't that simple, and I'm sure you guys know that already. So now what you need to do is you need to implement support and resistance. So we've got our 4-hourly fib. Now we need support and resistance. But what the thing is with support and resistance is, what did I say about the daily? I said it holds the most weight and most momentum. So obviously it holds, and as I said, it holds the most strength with regards to price. Okay, so now we would switch to our daily, and we would therefore look for areas at which we can place our support and resistance lines. And now with this, I look at support and resistance, but then I filter it out. I delete, I'll show you practically now, but I'll delete certain support and resistance, so therefore my zone isn't too big. Okay, so now I'll switch to the daily. Now I can see here's a 50 and 61. So you're always going to want to look for the most, how can I say this, the longest support and resistance line. So obviously the longer one will be obviously the stronger one, and that goes without saying. So that would be the strength of the support and resistance is based on its length. Okay, so now you can see that there is support and resistance over here. Daily support and resistance. Let me just change it to black so you guys know what the difference is between the two. So now here, now I'm drawing it on there, close to our 61. Here's a nice long one as well. Here's a shortish one. I will still take that into consideration because it is near our 61.8. But as you can see, this support, what is the rule? It's past support equals future resistance. So now price came down, came right past it, didn't break it here when price came up, and it came up again, didn't break it again. So the wick came up, but then the candles closed below it. So it shows, that's why you mustn't always, I don't want to go into too much complexity with this, but you don't want to always just look at support and resistance based on the length. It's also, you need to get an eye for it. So with more screen time and more trading time, you will be able to notice it. So now we've got our support and resistance lines. And we go back to our 4 hourly. So now we draw fib here. So now the black lines are support and resistance lines. So this is our final stage before, or second last stage, sorry. But this is the most important stage as we are drawing this is the final stage with regards to the zone, the drawing of the zone. So now what we do, obviously we don't want our zone to be too big. Otherwise that gives price way too much volatility and movement. Okay, so obviously we draw our zone. Okay, let me explain afterwards once I show you where to draw your zone. So now you obviously don't want your zone to be too big. Okay, so as I explained, you want your support and resistance lines that you drew and you analyzed, you want them as close as possible to your 50 and 61.8. You guys can go up to the weekly for support and resistance, but I don't think you should just yet, because rather master doing it on daily time frame, and then you can you'll get a keen eye for it afterwards. So now price is coming down, drawn our Fibonacci and support and resistance, and now we're waiting for price. Now we have to filter out the support and resistance that's way too far away. So let me just show you here that if we draw our zone, it would be from this support and resistance down to that one. But so the reason for our zone, say for example, a stupid example, that this was our zone. Once price enters our zone, we have to look for signal. How many signal confirmation or candlestick confirmations would be within this zone? So that's the reason I said we have to try get our zone as let's say small as possible, because you want price to come in and then you look for your candlestick confirmation. Okay, so let me just delete this so I don't confuse you. Okay, so now that you guys understand that, hopefully, you will start to. Okay, so now I can take these blue lines away. Don't worry, those were just for the flips. Okay, so now we would draw a zone, but the thing is, we would draw a zone from one support and resistance to the other. Okay, but let me try to put this simply, is we've implemented Fibonacci and support and resistance. And what is that? Fibonacci 50 and 61 is a magnet, as is support and resistance. So you're doubling up the area at which price is going to turn. That's why we call it high probable trading, high probability trading, because we're looking at price turning in our favor. So we're filtering out all of the areas at which price could give us false signals. Okay, so usually people would draw, well, I don't know who, I used to draw my zone, my kill zone from the 50, so from the lowest point of resistance, because or zone of rejection, because I thought to myself, okay, Jason, you obviously want to jump in at the first possible price that will get you in, or the first level of rejection. But that isn't always the case, because price could, how trading is a natural place, it's buyers and sellers. So rookies would get off that, sell off the 50. But the thing is, the 50, it's a strong area, but it's not gonna, everybody's gonna be doing it, and that's gonna influence the market. And then the professional traders, as we are, well, as we would be trying to get the highest point, as I explained earlier. So that wouldn't be the highest point, because there's still many more areas of rejection that price could give us confirmation with. And that's what's so nice about zones, is that if you don't get candlestick confirmation, I'll go through signal afterwards, the last point, later stage, but we would look at obviously signal, and if price comes into your zone, that's basically alerting you, listen, look at this chart, you can make money off of it. If price goes through your zone, don't always think it's you. Don't blame yourself when you trade. Okay, it's just going to lead to many more mistakes, because then you're going to want to change your strategy and change how you analyze. So if you draw your zone, it's alerting you, saying now we have to wait for signal. So I would therefore draw my zone from this point, I'm just showing you because I don't want to confuse you guys, but this is the area at which you would generally draw your zone. But I would actually draw it from support and resistance, because I can't, it's the reason I would have drawn it from support and resistance, these two support and resistance lines, is just simply due to the fact that I trust support and resistance more than a 50 fib, and I have gotten a keen eye into trading, obviously, and I would see this level over here with a 61.8 within support and resistance levels will be much stronger than just a 50 fib on its own. So you'll start picking all of this up at a later stage, but I just want you to understand why I would do it like that. So now we are waiting for price to enter our zone. Okay, so price is coming up. So there we go. So now price entered our zone right here. Let me just put it more across. Okay, so you would have seen price entered our zone here. And guys, even if price has just made a wick, it's so what? It's entered your zone. That just shows how strong your zone is due to all of this rejection in place. So can you see what I'm talking about now? Is that you need to, you mustn't back off once you see that, even if it was news. This is such a nice, say alert that the wick came up, price came up, and it completely got rejected completely by the zone. Okay, so now what I don't think anybody would have. Now you can implement my fine-tuning strategy with this, but I won't go through it now because I don't want to confuse you and put everything together. Go at your own pace. But there's the 61, and now what was the last thing I mentioned on our list? You need to wait for confirmation. Okay, so you would have seen, you would have entered. Nobody, if you entered on here, that would have been. I actually would have been angry if you entered on this one, because that's just alerting you. That's no confirmation. That's just indecision. What it would be here, I would have gotten in on this candlestick right here. Okay. Due to the fact tweezer tops, and I love how it looks just like an inverted hammer or hanging man. I love those kind of candlestick confirmation signals. So I would have entered off the close of this. So okay, I would have obviously fine-tuned it because I would have been alerted once this candlestick came in. I would have watched the zone. Then I would have gone down obviously to my half an hour and 5 minute. But now, if you were just doing it normally, well, I can't say normally because it is normal, but what you would have looked for signal was, that would have been tweezer tops, would have been your signal. The candlestick would have been your signal. Okay, but that's one tick in your favor of candlestick confirmation. But now you look at your beautiful stochastic. I'm sorry, I actually love stochastic. It turned right here, came into an overbought area, so now it turned right here, turned right down. MACD is still down. It's showing your momentum is still right down. Would have entered there. Entered. Sorry, we're making way too much money. I actually have to shift the chart. Okay, so would have entered here. Look at that beautiful profit, guys. But the thing is, you need to, I hope this video has helped you a bit. If you, obviously, as usual, if you have any questions, please come in or come onto the chat room, actually, because if you come onto the chat room, it'll be much easier for me to post charts back to you and you to post charts to me. Okay, so if you're not on the chat room or subscribe to the chat room, please do so, because, well, I'm not obviously forcing you to do that, but I would recommend doing it, because everybody can bounce ideas off of each other, and if you guys have the same questions, you can obviously ask me. Okay, so you would have ridden from here. Oh no, it's beautiful. So you would have ridden from here right till here. How many days would that have been? Would have been. No, you actually would have entered from. Yeah, from this candlestick. Sorry. From that candlestick. From here, 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's say 9.5 days. Okay, so that's just maybe a week and a bit. If you guys had the mindset to stay in trades as every trader should, you would have been in. I actually don't want to scare you with how much profit you would have been. It would have been 272 pips. Okay, so that is a beautiful, and that's one pair. It's, how amazing is that? Is that you implement, I know most of you probably do know how to draw your zones, but this way is just solid. It's foolproof. Okay, Oh, sorry. And the other thing is the Bollinger was PS3. Yeah. So I hope this did help you guys, and you guys would have exited. Let's say you would have exited once the stochastic turned fully. Okay, so you would have been in a nice trend. Okay, so you would have been in a nice trend. You would have been going with momentum. You would have had everything in your favor. So please implement this, and please do ask questions, preferably on the chat room, or if not, call in, email me, jason@forexvarsity.com. I'm always here to help you, and I hope you guys do use this, and I hope this will, to the ones that it is new to, I hope you guys do use this. I'll go into more detail with regards to this at a later stage, but I just want you guys to grasp this component of how we initiate and analyze our zones, or 4 hour zones. Okay, thank you.